Hey guys, it's Jeff Wilde from the Spartan Trader Forex Academy. I want to quickly talk about something we're asked about all the time. And traders will say, hey, what are the best markets to trade? What are the best currency pairs? What are the best times that are going to deliver the most profits? So let me jump right into that. Now you have to understand something. There is no one ideal market. Okay, so whether you trade Forex, stocks, bonds, options, ETFs, okay, there is no one best market. In other words, there's not one market that's going to just make life so much easier. And the reason I say this is because any market, no matter what it is, once again, it could be currencies, stocks, bonds, futures, they can only move up, down, or sideways. Now, when I say sideways, it could be in a trading range that's quite defined, or it could be like this choppy price action, but it's still going sideways. So that's it. And it doesn't matter if you looked at a technical chart from 50 years ago, or if we could flash forward by some magic trick 100 years from now, you'd see that the stocks or any market can only go up, down, or sideways. That's it. Now, this is actually great news. Because of the fact that this behavior never changes, it helps us make money year after year. So how do we do that? Well, here at Spartan Trader, we're what are called technical traders. In other words, we're looking to find chart patterns that we can capitalize. We want to find a pattern that's repeatable so that we can jump in and catch a ride and grab some money and then look for another trade and another trade. So this is what we spend all our time, or a lot of it, at Spartan Trader Academy. We teach traders how to find these patterns. And the thing about it is, once you start practicing and get the hang of it, it's easy to do. So, the $1,000,000 question, what are the best currency pairs? Well, it's anyone that will make us money. Okay, and as I mentioned, anyone that they all move up, down, or sideways. And so they're all capable of putting money into our account. So we just have to recognize, are we in the up phase, the down phase, or the sideways phase? Okay. Now the thing you have to keep in mind is there's a ton of currency pairs. Some brokers open or offer as much as 150 pairs, but most of those we're not even going to look at because these are what's called exotic pairs, and they have very big spreads, which basically means that it's going to cost you way too much money in transaction costs to get into those trades. So what you want to do is stick to currency pairs that have small spreads of 5 pips or less. 3 is even better. And if you're an active day trader or scalper, then you want to find a broker that will give you 2 pips or less. Keep in mind, some brokers, the bigger account you have, say you've got $20, $50, $100,000, they will usually even reduce these spreads more than the average person will, pay. So I have a list here and I'm not going to read them, but these are all currency pairs that tend to have much more reasonable spreads of, like 3, 4, 5 pips or less. So stick to those. That's going to give you more than enough trading activity, okay, and opportunities. So now you might want to know, well, what's the best time to trade? Okay, there isn't one best time to trade, okay? But the bottom line is, as a trader, you want to have a lot of volatility. And what volatility basically means is there's a lot of movement or momentum in one direction or another. It's the volatility that allows you to grab a nice piece of the market as it moves. So like, let's say you get into a trade and you pick the direction right and the market skyrockets within a few hours 100 pips. Well, it's going to be very easy for you to get a nice piece of that. But if you do your analysis and you're still in the right direction, but the market slowly goes up over a few hours, only like 15, 20 pips, it's very hard to make money, okay? And that's because there was no volatility, all right? So we want to have a volatility in the markets. So the bottom line is that high volatility makes it easier to make good money. Low volatility, it's going to be much more of a struggle, and you're often going to be stopped out a lot more, because when the markets are in this low volatile kind of period, it's easier for the brokers to play games and stop you out. And the thing to keep in mind too is you have to remember you're never going to grab all the pips. All right, if a market moves 100 pips, you're trying to grab a nice piece of that. You're never going to grab all the pips. All right, you can only do that in hindsight. Okay, so let's get more into the volatility. You have to keep in mind that there's no way ahead of time to know when the volatility, the biggest moves are going to happen, but you can get a few clues. In other words, like if you're trading these times that I have listed here, okay, like 2 p.m. to 6 a.m. Eastern Time, New York, or 7 p.m. to 11 a.m. UK time, you're going to have more opportunities because the markets tend to move more at these times. And so generally, if you catch the first 2 or 3 hours of either the New York Open or the UK Open, they have a lot of volatility, a lot more opportunities. And this is just a little thing you can look at. It tells you the times that these markets open and close. And the thing to keep in mind is there isn't one best time to trade, because sometimes the best trades are going to happen during the London session. Other times it's going to happen during the New York session. And then there will be times when big moves will happen out of the Asian session, even though that typically is a time that there's lower volatility. The big takeaway here is you have to keep in mind that there's no way ahead of time, unless you have a crystal ball, to know when the next big trade will start. So I really can't stress this enough. Don't worry about the trades you miss. Okay, you're going to miss some big ones simply because you're working or sleeping or hanging out with your kids or your wife or your spouse. So unless you can sit at the computer 24/7, you're going to miss trades. It's just part of the game. But the good news is there's always going to be another trade setting up. So you just need to kind of always not worry about the one you missed, but realize that there's going to be always new options or new opportunities happening, and you just have to be ready to take action. So that's it, guys. This is something like very small, but it's very key for you to understand that there isn't one best currency pair and there isn't one best time to trade. It's highly variable. Okay, you have to keep in mind that trading is as much an art form as it's not an exact science. The markets don't move on logic. They move on emotions, fear, and greed. Okay, and a lot of misinformation. So your job as a trader to try to trade with the pairs that give you the best opportunities. And once again, that means with the lowest spreads. Try to trade at the times that will probably give you the most movement. Okay. And then when you put that together, you're going to stack the odds that much more in your favor. So that's it. Once again, this is a small but vital piece of the whole trading equation.